But first, the big story of the week, and that's the Fed's rate decision. While the timing of the Fed's first cut is front of mind for investors, could stubbornly high inflation and a strong economy add another wrinkle? Further hiking? We put that question to economists and strategists here at Yahoo Finance, and here's what they had to say.
We are set up for them to cut this year, and probably more than once.
If the data are making a clear case for cutting rates or raising rates, for example, the Fed would do so.
A raise? Do you think they could still raise?
I don't think that they would.
If inflation is, persisting into the second quarter at a rate above 3%, absolutely they should be very seriously considering more hikes.
So let's talk about what you should be watching from this week's meeting. Joining us is our very own head of news, Myles Udland. Myles, I think the big debate out there, obviously, when you take a look at the recent data prints that we've gotten out, especially when it comes to inflation, we're not seeing improvement there. Do you expect much of a change from Powell this week?
Well, I think really the most important thing for investors will be if Powell continues to say the three words, at some point, because that has really been, at this point in the proceedings, what investors continue to key off. We're not having a rate hiking conversation, as we just heard in that package, and it's really because the chair continues in a variety of public settings to say, we believe it will, some version of, we believe it will be appropriate at some point this year to, reduce restriction, right, or to increase accommodation, however you exactly want to finish that phrase. And so as long as Powell continues to suggest that not only is the next move lower, which is kind of a separate conversation, but that it will happen this year, I think there will remain optimism from investors that it will happen. Now, the timing after this month, really after June, gets increasingly complicated, but I think more and more economists are of the mind of, let's just have that conversation when we need to have it, and let's get through June if the Fed indeed does not cut in June, and then we can worry about the politics, the election, the timing, all those sorts of issues.
Sometimes, though, it's a tale of two Powells in the meeting. He's tough, hawkish during his commentary, and then in the Q&A, reporters tend to get a little bit more of hawkish commentary out of him. What do you think the market will do if we get those two Powells on Fed Day?
I think I will be surprised if Powell doesn't. He's spoken twice since the last FOMC meeting, so he's said a lot. And I think given what we saw in Friday's PCE print, I will be surprised if he sounds really any different, meaning that he will continue to back up this notion that there will be cuts at some point this year. And while there may need to be some patience from investors who wanted the 6 cuts, obviously that's not going to happen unless you get a 50 basis point cut, et cetera, et cetera. I think you will continue to see most of what we've heard from Powell, given the volume, again, not just of Fed speak in general, but from the chair specifically that we've seen since the last meeting.
Myles, how do you think this sets up the pricing action that we could see? Because obviously you have so much focus placed on the Fed, exactly what we're going to be hearing from Powell. But then you've also got another huge week when it comes to earnings, exactly what we are going to see there. And at least up until this point, it has proven to the fact that earnings remain strong, coming in better than expected, and it has been enough to keep this market's momentum to the upside.
Yeah, I think all else equal, I think investors would prefer to care about earnings more than they would prefer to care about the Fed. And I know there's some data going around that this has been a quarter where you've seen companies punished for missing earnings, and they have not necessarily been rewarded at the same pace that they were in previous quarters. But in general, you kind of saw last week the theme coming through that investors, they basically want to root for the corporate story more than they want to care about the Fed story. Because there's a version of the Fed story where it's going to be 8 straight meetings. So almost, it's going to be a year that we've seen rates held at this level. And I think investors have made their peace with that. They made their peace with that really last summer. We saw the rebound from the rise in yields in the fall. There's been a lot of comfort that, okay, in a perfect world, I would rather not the Fed funds rate be at 5 3/8. But if it is and it's going to be steady to lower, we can be okay with that, so long as profit margins, which are now kind of recovering just a little bit, look better. So long as you continue to see the generically phrased corporate fundamentals continue to improve. That is ultimately what equity investors want to see more than anything else. I think the Fed is easier for us to talk about, and I think that's why it gets so much play. But for the investors, the investor audience, specifically the investor class, they want to talk about earnings, and you start to see glimmers of what people are focusing on last week, and you'll probably see that again this week. But what do I know?
Well, there's more to talk about with earnings too, like you said.
That's why we have you on. We're kicking off the brand new show,
As I'm talking, I realize I'm saying the market's going to do, implying it's going to do X, Y, or Z on Wednesday. It's like, I don't know.
It's one potential
Markets go up, markets go down. Exactly. We're going to wait and see what happens.
I think if it does nothing, that's the perfect ideal, right? The platonic ideal of market reaction for Powell.
There you go.